Well, let's talk now to Anthony Chan, who's a former global chief economist at JPMorgan Chase. Welcome to the programme. Thank you for joining us. So, do you think that these measures being announced are the right ones? Will they do the job of helping China's economy meet its targets?
Yeah, I'm actually pretty confident because it's a multi-pronged approach in which China is going to really use its policies, tools, and certainly has some plans for longer term to keep growth on a sustainable basis. So I do think they have the right tools. The question is when and how and when they will execute them.
Well, let's dig into that. We have heard a lot about consumption in these meetings. How is China going to kickstart that consumption it's after and convince people to start spending?
Well, I think they already are, in fact, making those plans. They're certainly going to enhance the public safety net to basically make people feel very comfortable that somehow if they spend, they're going to be fine. I think that stimulating with targeted fiscal policy programs is the right way to go. The trade-in for appliances, for electric vehicles, all that is going to boost consumption. Remember that boosting consumption is the right way to go because there is some uncertainty with regard to the outside or the trade sector. So to boost consumption would be the right way to go to ensure that you get that 5% economic growth. So boosting consumption and stimulating consumption is certainly a viable option for China.
Well, you mentioned uncertainty, particularly in the trade sector. What about those external challenges that tariffs throw up? What can China put in place to deal with these?
Well, I think that in the short term, it is unfortunate. It raises uncertainty, but I think China longer term has already taken steps to diversify its trading partners. That means that it's not just going to rely on one country, say the United States. It's certainly going to look at some of the global south, a lot of countries in Asia. It's going to look at Latin America. It's going to also look at Europe. So it is going to move in diversification and also willing to talk to make sure that these trade uncertainties sort of dissipate with more engagement on both sides.
We did have some news on interest rates. The People's Bank of China saying it wants to cut them, as well as the reserve ratio for banks. How much do you think it will cut, and when might it do it?
I think it's waiting to see the resolution of this trade uncertainty and to see whether or not it's going to intensify, whether it's short term. But I think the interest rate, the policy rate, the 1 year rate can easily be cut anywhere from 20 to 30 basis points. I certainly think that China will, in fact, engage and lower the reserve requirement ratio because that, again, frees up money for banks to companies in China to spend more money. And by the way, they could also make provide more liquidity or more loans to the commercial banks so they can lend. So there are many policy tools that the central bank has to ensure that economic growth moves towards 5%, not to mention the other factors that we mentioned, like fiscal policy. So there are many, many policy levers that the Chinese government can, in fact, use to ensure you get that 5% growth. That's why I'm so confident that they will get 5% growth this year.
Anthony, great to talk to you. Thank you for coming on the programme. That's Anthony Chan, former global chief economist at JPMorgan Chase.